ShadowTrader uncovered. ShadowTrader Studios.
Let's do it.
Without further ado, we have a special guest on the line today. His name is Jim Dalton. Jim, are you with us?
Peter, good afternoon.
Good afternoon, Jim. It's so good to have you back.
Thank you.
How you doing, Jim?
Jim, this is obviously Brad Agunas, who's sitting next to me, co-host, and we are very excited to have you on the show.
Well, thank you. Brad, how are you?
Never better, Jim. Thank you so much, and we really appreciate you being here and taking your time out of your busy day, so thank you.
Well, it hasn't been very busy. Markets are pretty quiet.
That's true.
I guess that's true, Jim.
That is true. That is true.
Only because of you guys that I'm still hanging around.
So, Jim, you wanted to do a little bit of a presentation here, right? If we could, Anthony will get the first slide up, right?
Yes, so let me know when the slide's up.
Okay. So, Anthony, you can just tell me when it's up.
Well, we're waiting for the
slide is up, Jim. You have the floor.
Thank you. What I really wanted to talk about today is how to strengthen your trading by using market structure. There's a lot of questions. People aren't sure what do I mean by market structure. So let me try and make it tangible. If we can go to the second slide, I'll talk about what is structure. To understand structure, you have to come back to what my basic belief of the market. And my basic belief is the market is a continuous two-way auction process. And the market auctions continuously from high to low and low to high. The market profile is the tool that we use to capture the structure of the market or to capture the continuous two-way auction process. There's a tremendous amount of misunderstanding about the profile. To me, the profile is simply a tool used to capture the auctions. It is not I don't trade the profile, although I use information generated by the profile to make trading decisions. And you'll see that today. My view is that the market profile is a dynamic, ever-evolving structural database. But that means is every time the market changes, that the auction changes and it changes the shape of the profile, that is releasing more structural data for me. But let's try and make this tangible, and what I'm talking about and how I use structure and how I see the importance of structure by looking at last Thursday's structure from two different perspectives. So we can go to the next slide. You'll see Thursday's market, December 26th, split out in 30-minute bars. I use only 30-minute bars when I look and trade the market. There is no requirement to use 30 minutes. You can use 5. You can use an hour. You can make the profile. Each period could be a day. I use a 30-minute bar. What you are looking at on the slide in front of you from last Thursday, you see that the market opens in a period. You see initially the market auctions higher. Then you see it down arrow, it auctioned lower. Then it auctioned higher, it auctioned lower, it auctioned higher, and then higher again, then lower, higher. You see that whole process. So that's when I talk about a continuous two-way auction process, that's what I'm talking about. When you see a day like Thursday, the market is hitting directionally higher. It's not a strong trend day. It's a low-confidence trend day. But it is a trend day. And the difference would be if you had the profile auction higher for a few periods, but then overall start to go back lower, you would have a rotational day. So I really look at two types of days. A trend day, and this is a trend day, although it's not a particularly strong trend day, or a rotational day where there's really no major change in price or value in the market. And value is where 70% of the trade takes place. So the one look is what you see right here is just the 30-minute auctions, and you see the continuous auction market going from low to high and a continual process. Now, if we take that, well, first of all, before I leave this, there's some good signs for traders in here. even though it's not a high confidence day, if you look at the little green ball in the lower left-hand side, that represents the opening. So the opening on Thursday was made, the low for the day was made on the opening. So from that aspect, the market is directional and high confidence from the day. One of the things I use when I trade is I want to see if the market is going to continue to one time frame higher. One time framing means, in this case, that B period does not take out the A period low, nor does C period take out the C period low. And you see, even though there's not a lot going on, the market is one time framing higher. The first time you see the prior period low being taken out is in F period. It's only taken out by one tick. It does not count. It has to be taken out by 2 ticks in order for the market to stop one time framing. So this market, one time framed higher for 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 periods, from A period through J period. It did not stop one time framing till we got to K period. So at K period, if I am long this market and it's one time framing higher, even though the auctions are continually going from high to low and low to high, the overall net movement is higher. So in that point in time, the one time framing served me very well. The place to exit the trade is when the K period stops one time framing higher. So that's what the market looks like if I spread it out via 30-minute bars. Let me go to the next slide, and let's see what this market looks like if I collapse those 30-minute bars and show you the profile from a different point of view. When I break the market down and look at the completed profile, I see 2 separate distributions. I see a lower distribution and I see an upper distribution. I treat each distribution as a separate day or auction. Now, so my structure, that is what I would call a double distribution trend day. That's not the technical definition. A technical definition, you've got single prints between the 2 distributions, but that's just something somebody used years ago. I look and I say, what is the effect? The effect is that I have 2 separate distributions. That's what my structure looks like. I also look on the high, and I do not have a good high. A good high would have single prints on it. This only has 1 print that is not a good high. It would need to have 2 prints above it in order to say that was a secure high, or a high that demonstrated there was some type of aggressive selling on the high. So this market does not look complete. So when I look at this structure, I said, okay, I know on this day, I know value was higher, and I know the market was higher, but the auction does not look to me, based on the structure that I'm looking at, as if it has completed itself. So when I come into the following day, as I prepare for trading on Friday, I am looking at the upper distribution. I am treating it as a separate day or auction. What I want to know on Friday, am I going to open in or out of balance relative to that upper distribution? That upper distribution, the high of that upper distribution becomes resistance prior to the opening. If I trade above it, it now becomes support. So with that in mind, I'm looking at it saying, okay, I have double distribution from Thursday. I'm coming into Friday. I am going to use that structure to help guide me on Friday. So let's go forward to the next slide. When I look at the next slide, you will see that Friday's early session, look at the A period, and you'll see a green dot, 3 ticks off of the high of A period. The green dot is the opening. The market opened and eventually worked its way down to Thursday's high. Remember, we said on the upside it's resistance, on the downside it is support. Remember also when we looked at the structure, we said it did not look like Thursday's auction was completed based on structure. So I would think there would be a pretty good opportunity to see the market trade or at least investigate above Thursday's high on Friday. So Friday's early pitch session low, you see the A period low and the B period low are both at the same price. So again, that structurally, that is not a good low. There's no single prints down there that show there was any buying. It came down mechanically right to the top of Thursday's range. When I see indications like this that it's trading exactly to a previous day's high or low, that is usually an indication to me that the market is being controlled by day time frame and very short-term traders. Short-term traders to me are 3 to 5 days, maybe slightly longer. It's very helpful to me to know who is in control of the market because the market will trade differently when we have the day and short-term traders trading versus when you have longer time frame participation. There's always the question what people say with the high in A period up here and then trading lower, or with the high in A period higher than the Thursday and single prints. People want to right away say, well, did we have longer time frame selling? And my answer to that would be no, because if there was longer time frame selling, you would have gone very easily back into Thursday's range. So right now I'm probably looking, when I look at Friday, I'm probably looking at very short-term trading money in the market. Now you will see in C period, the market gets 3 wide. So if we said 2 wide wasn't a good low, 3 wide is an even poorer low. So when I look at that, I have a pretty good perspective that the structure of Thursday's high is not going to hold. So let's go to one more slide. Are you there? Can you guys hear me?
Hey, Jim.
Yeah, Jim, we just have to take a short commercial break. So right here, before you flip to the next slide, why don't we just go on break, and we'll come back in about 90 seconds, and we'll pick up where we left off. All right, we're back. This is Tasty Trade, Shadow Trader Uncovered with your hosts Peter Reznicek and Brad Agunis. Today we have a special call-in guest. We've got James Dalton on the line. Jim, do you want to just pick up where you left off?
Absolutely. Do you have the slide up that says Friday, December 27th, AM chat dialogue?
Yeah, we'll give it 1 second. Anthony, if you could just put that slide back up. Okay, slides back up. Jim, you got the floor.
Thank you. We were talking about Thursday's high at 1837.75, and initially we had an AB print at that high. That is not considered a good low. A good low would have at least 2 single prints below it that had shown some rejection. I just finished saying that when I see this kind of trading, it's usually an indication that it's short-term money. Understand, short-term money can be very fickle. The minute C period opened, you will see that we went 3 wide at 1837.25. As soon as I saw that, you'll see on the right-hand side of the slide, I put out a post, and that's the timestamp on the top, and it said the poor low, which is also at Thursday's high, increases the odds of additional downside. Additional downside takes us deeper into Thursday's upper distribution. So that was what I saw exactly at 10:30 when the C period printed, and I knew that was 3 wide. It looked to me like that structure was not completed. You will see following the post, because the half-hour changes at 10:30, you will see following the post that the market traded off. And what I'm trying to get here, I don't really care what other indicators you use for trading. I am saying you can supplement your trading by understanding the structure of the market. Some of that structure is dynamic and occurring today. Some of the structure is from a previous day. A lot of what happens in trading is very similar to playing 21 in Las Vegas, or playing blackjack in Las Vegas. If you're playing with a single deck, for example, the cards that have been played before determine the outcome or determine the odds going forward. So what happened on Thursday helps me understand the odds going forward on Friday. So first of all, we looked at Thursday's profile and I said it did not look to me like the auction to the upside had been completed. And you see the market did go higher, again, based on structure. Now, I'm looking at Thursday's structure, and I see the 3 high early in the morning on Friday. So once again, I'm saying, I don't think Thursday's structure is going to be supportive of the market on Friday morning. If it was going to be supportive, I would expect to have seen the market come down to Thursday's high and be rejected from there very quickly. All right, now let's go to the next slide.
Okay.
All right.
Well, let me know when it's up.
Yep, it should be up. It should be up right
It's
now.
up, Jim.
Okay, go ahead.
Okay, so once we trade below Thursday's high, now my focus shifts to the next potential structural destination. Where could that market be going? Once I got back into Thursday's range, what might be a logical destination? And my focus shifted, and what I was looking at was 1834.25, which was the lower extreme of Thursday's upper distribution. Again, that's how I use structure. So I'm saying if I fail at one part of the structure, the potential is to trade down to the other portion of the structure. So you can see that's exactly what the market did. Any of you know me, and Peter does, I never cherry pick examples. I will only use examples that I can demonstrate that we made the comments before it happened. So you're not looking and saying, well, anybody can go find an example like this. These were all comments based on structure that were made ahead of time, just like the 3 wide was made. Let's go to the next slide.
All right, Chicago, let us know when it's up. Okay, it's up, Jim.
Okay, and the next slide shows a post I put out at 10:45. I'm using 1834.25 as the dividing line between distributions, meaning between Thursday's distributions. Acceptance below 1834.25 increases the odds of an outside day. Okay? All I was doing in here, there's absolutely no magic. We got a little lucky by putting the post out and getting C period to go exactly to the tick. But again, when it's short-term day and short-term traders trading the market, very often you see it go to exact ticks on the market. So when I'm looking, that's all I've done is given you a short example of how I use structure to help guide me through any particular trading day. And so there's just if there's one more slide from that, and then I'd be more than happy to take as many questions as you might have. And the last slide is from a chat comment I put out at 11:23. It says, so far, the low is exactly at our reference, which is simply the low of Thursday's upper distribution. I would need to see us settle below 1834.25 for higher odds of downside continuation next week. I mean, and that's all I've used structure. It is not as difficult as it appears in there. Peter, let me take any questions that you all might have.
Jim, the nature of it, because you're actually our calling guest. It's hard for us to take questions from the audience, but I have a couple of points that I would definitely like to raise with you. First of all, thank you for the presentation. It's really sharp, and I think that overall, Jim, it completely confirms, I think, what both you and I have been saying for some time now, that seeing these very, very short-term structural references constantly being touched, like very often to the penny and not breaking, it definitely confirms that this other time frame or longer-term money is not really in the market. Would you agree?
Yes, absolutely.
Right. So
I heard,
also
I heard
beyond.
somebody. Pardon?
Go ahead. I'm sorry. Go ahead. Mm-hmm.
Oh no. I was listening to the show before you guys picked me up, and I heard somebody talking about one tick buying something that opened one tick above the overnight high. You know, those are other structural references we use all the time. The overnight high, the overnight low. Again, they're references that were created by the market itself. And again, when the trading is a lot of short-term money, one more time, those references turn out to be very exacting.
Mm-hmm. Exactly. What do you make of the very minor excess on the 1228 session? I mean, it's been a long time since we've seen an all-time high made in a regular trading hour session, so I think it is significant in that case. But I'm just curious how you feel about the excess there, being that there's basically, 3 TPOs up there from the open, that B period, then it goes 2 TPOs. I would categorize it as, and this is a term that I've heard you say, not very meaningful excess, but I want to know if you could speak on that a little bit.
Well, you raised the excellent first point, and one of the things that we talk about consistently is when a high is made in the overnight markets, it is rare that is the end of the current auction. That doesn't mean that you won't get corrections. When they were going through the budget battle in the House and the Senate, we had a 5% correction, but the high had been made in the overnight market. We came back, took out that overnight high, and we saw that consistently. So what I wrote up for people coming into trade today was be alert, because the excess high now was made during the pit session hours. I obviously will put more significance on that than I will put on a high that is made in the overnight markets. Now, to use your terminology, or my terminology, or both of ours, it's not gratefully earth-shattering that it's only, a few ticks. However, it is an excess high. It is an excess high. It was made during the pit session hours, which has more credibility. Now, you now need to take the market forward and say, okay, let's see what develops from there. Because you could have a short-term correction that could last, a few days, and say, okay, I didn't have a really substantial high, so maybe after the correction's over, I'll come back to that high. So that's something to consider. But right now, we do have an excess high. Value today is overlapping to lower relative to Friday. Even though the Dow is up 16 points, the value is overlapping to lower. So we do have the potential for the start of a short-term auction to the downside. When I look at this, I'm saying one of the things that I wrote up here this morning was it's the expected activity as you come into the end of the year and the first couple of days of next year is for the market to be quite a bit higher, or at least to be solidly higher. You're not getting as much conviction as we have had in the past. And we know historically that if we end the year weak, it is not uncommon to have a correction early in the following year. So that's what I'm watching right now. Now this is only the 30th, so that it's not over, but it's not as strong as we have seen in some years. And value is overlapping to lower today. If you go back and you look at the last chart that I had up there, where I had the two distributions, we have still only traded marginally below the low we had on Thursday. We're only marginally below it, and but we also have a very poor low today. So again, when we go back and look at structure, we have a very poor low today. So this is not the year is not closing out as strong as we normally see, or as strong as I would expect, or not necessarily I would expect. But what I wrote was you have the expected, and the expected is for the market to close much stronger than it's showing. The unexpected is for it to close a little softer. In my opinion, we're getting a little softer action in the market as we come to the end of the year. So back to your initial question, we do have an excess high. It was made during the pit session. It's not dynamic, but we do have one. one final comment. If, in fact, sometimes what will happen, when you have a mediocre high like that, and it doesn't look anything that should scare you, what follows that really validates it is you get a gap lower that holds. So if, in fact, down the road here, that excess high stayed, but it was followed by a gap lower, now that would validate the high, and it would put a heck of a lot more emphasis on it. That's a long-winded answer for your question, but I hope that's helpful.
No, but I think that's awesome, Jim, and we're going to actually leave it there. That's a great way to look at it. I'm so happy you were able to join us today. Not only that you were able to take the time, which we very much appreciate, but specifically you have to understand that these are concepts that we've been talking about on this program for a year to year and a half now, and we constantly talk about these same inflection points about poor high, poor low, and why they're important. And it's just great to hear another perspective from somebody such as yourself who's been involved with the profile for so long to basically, kind of validate what we've been saying for a while about,
so much
about
experience
the same things,
with
right?
it. Yeah.
It's wonderful.
Well, thank you guys very, very much.
Definitely. Jim, thank you for taking the time, all right? We'll talk to you soon.
Thanks, Peter. Thanks, Brad. Bye.
All right.
All right,
Bye-bye.
Jim. Happy
We'll
New
see you,
Year.
Jim. Happy New Year.
ShadowTrader uncovered. ShadowTrader Studios.